Hello everyone, how's it going? In this video, we will cover the stock Cosmos Health, trading under the ticker symbol COSM. The market has been volatile recently with many equities up and down. Many people are interested in Cosmos Health because of the short squeeze potential, and in this video, we will take a look at the stock from a technical and fundamental perspectives and determine what could be a recommended course of action to carry out Cosmos Health. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description below, as every help is greatly appreciated. Over the past few days, Cosmos Health has been continuing the retracing. So at one point, it has tested the $7 level, and right now it's trying to consolidate around the $5 level, currently at $4.73. So the stock has been down by 8%, and the upward momentum, I would say, is put on hold for the time being. When we move on to the 30 days tendency, we can still see like a bounce back of more than 30%, which is definitely good news. So I would like to talk about like the current market momentums and which kind of tendencies do I see. In my opinion, the current market tendencies are an attempt to recover from the previous sell-off. Because even if we might be entering into a recession period, even if the economy might not be as prosperous over the next couple of years, we still want to believe that things will be better. And as a result, the market at large has recovered significantly from where it was. And this is why for a lot of titles, they have actually covered quite a bit. But that's not really the case for COSM, Cosmos Health, mostly because, well, on one hand, this is what happens with a lot of like retailers, mainly retail supported stock, right? This is not a stock where a lot of people are institutional money managers and they want to buy like a position in Cosmos and hold on to it. This is a situation where most people owning COSM, they want to see like a very quick reaction from the stock. Can it bounce significantly in terms of percentage? Absolutely. As long as you get in low enough, there will be, in my opinion, enough reasons for the stock to go like parabolic over a short period of time. It doesn't matter whether they would have like fundamental backings, as long as they have what I would like to call psychological combustible. So let's say today there is a major news concerning the economy at large, saying, you know what, the conflict has ended and we are now, we're going to print money once again. Well, this is going to have an immense effect on stocks like Cosmos because its shareholder base is more reactive, and at the same time, they're more willing to like YOLO it. You see what I mean? Like very few institutional buyers are going to risk like more than, I would say, 5%, or actually not even like 1% of their portfolio in Cosmos. But it's not very rare to see people risking like 50% or more in penny stocks like this. So this is why I would say that if there is any sort of upward momentum, it's going to be very quick. It's going to happen in a very sudden manner. And this is the kind of thing that we're trying to see with companies like Cosmos. Cosmos Health is an international healthcare group based in Chicago selling nutraceuticals. They also commercialize generic medications. They have a commercial presence throughout Europe, Middle East, Asia, and of course North America. The company has an emphasis on nutraceutical research, development, and commercialization because of the low-risk profiles and regulatory clarity in this area. We should also mention that the management believes that the stock now has solvency issues, putting its going concern into jeopardy. The management mentioned that due to the recurring losses, there will be eventually a going concern issue to be put on the table. They believe that there can be a few solutions that must be considered for the company's survival, including debt issuance, diluting the shareholders, or reconstructing the debts. In other words, reducing the money going out and increase the money coming in. The company probably chose the road of selling the equity, taking the advantage of the renewed interest recently from retail shareholders due to the expected short squeeze and the price increase that soon followed. The long-term price action has been plagued by poor results, as well as the short orders piling up against it, causing the stock price to plummet for a period of time. For the period between August and November of 2022, the stock price declined by more than 83% before recovering back a bit. Over the past few years, it mostly traded between the high tens and lower three digits. Obviously, if we only look at the whole situation from a technical perspective, it looks like a historical opportunity to buy in now and to wait for a recovery. I don't believe that we are in this context anymore, as the market and the company are now evolving in a different environment. With that being said, we should be able to see some significant recoveries nonetheless due to the short squeeze, as if it were to occur. Although the relevance of the financials are limited at the current point, they can tell us how the company is doing, especially regarding the going concern and the long-term perspectives. Regarding the profitability, things are on the stagnating side, as both the revenue and gross margins are having a very hard time growing, with the operating expenses still hovering between $2 to $3 million. This means that if Cosmos Health is popular with shareholders, people are looking at the potential of making money beyond its fundamental results, if we assume that things would remain constant. Now, if we have to find good news in its financial statements, it would probably be that liabilities being under control. It's been controlling between 40 to 45 millions, away from the peak of 51 millions back in Q4 of 2021. This means that the company is trying its best to keep things under control. Another thing that we can see is that the company's assets are almost entirely financed by debts, with a relatively small portion of the operations financed by equity. This means that Cosmos can have a significant amount of obligatory cash outflows, and if they don't comply with those, they can go insolvent, with the assets liquidated to reimburse the creditors, and then the leftovers, whatever that may be, could be zero, goes to the equity shareholders. The cash situation for Cosmos is also negative, with most of the cash inflows from financing. This is from, of course, the issuance of debt and sometimes sale of equity. It also confirms the remarks earlier regarding debt versus equity financing, as well as the obligatory cash outflows. The situation of Cosmos overall is not looking very good, which could be the reason why it has a large position shorting against it. This can reinforce my feeling that Cosmos is a good stock for trading, but not necessarily for investing. The low cash levels suggest that a company can have a lot of problems going forward without stock dilutions or debt issuance. Now, let's also take a look at the shareholder composition of the company. According to Fintel, currently we're all retail traders holding the stock. If this were true, then we would be looking at the stock that is obviously good for volatilities and short-term swing trades, but the uncertain future of the stock itself and the company itself would mean that the short-term outlook could be very volatile and not always upward. One key behavioral difference between institutional and retail shareholders is their investment horizon. Institutional shareholders tend to take a long-term view with a focus on the company's fundamentals and growth perspectives. They're also less likely to engage in short-term behavior and less affected by the market volatility as well. Another behavioral difference is that they are more active in corporate governance. They tend to vote more on important decisions and during the shareholders' meeting, whereas many retail traders and investors would tend not to bother because the number of shares they have is way too little to affect anything if they understand the issues at stake at all. In fact, Cosmos Health has a massive appeal, mostly because people believe that there can be a short squeeze. Short squeezes are what shareholders hope to achieve by piling up in a stock that is massively shorted, to force the short sellers to redeem their positions, therefore buying the stock back. They are very often compelled to do so because as long as those positions remain open, they have to pay financing fees, eroding away their profits, and also have to assume the risk of infinite losses. In the case of Cosmos, there's a large position of shares been shorted against it, taking more than 1.3 days to cover. This means that if the shares were to skyrocket, whether because the fundamentals have improved, or if the circumstances surrounding it have changed, or that the demand for the stock increased with no fundamental reason, this can force the short sellers to redeem their positions. I believe that Cosmos has a significant possibility to squeeze, at least for the moment. It is very important to remember that short interest doesn't guarantee the result, but nevertheless, it can be a very important metric to monitor. It's also worth considering that short sellers have valid reasons for their bearish sentiment for most of them, and that a short squeeze may not happen regardless of how many stars are being aligned. Based on my analysis, assuming that the price can stabilize around $5 eventually, I would still recommend to start buying Cosmos over a period of 6 to 8 weeks, and then to hold it for about 30 to 50% from the cost basis. So I believe that COSM deserves to be in your portfolio eventually if your risk tolerance is considered to be high, and if your holdings are sufficiently diversified to counter any sort of potential price risks or solvency risks. The best approach in this case would be to smooth out the short-term volatilities, to buy them in very small batches, very slowly over time. Now, for people who have like a normal tolerance for risk, maybe there will probably be better opportunities elsewhere, because Cosmos is one of those companies for which there might not be a long-term future, right? There might not be because the company has said at one point that they have like going concern issues. So this is why if you're not in for the short-term volatilities, then I would say that there are better investment options out there. The maximum exposure I would recommend is going to be about 1% of your portfolio.